All right, good evening, everyone. If you can hear me, you're welcome to tonight's end of the day analysis. The essence of this class is for us to do what? Is for us to actually prepare ourselves and set up for the week that is coming. There is a lot to achieve. There is a lot to achieve for the week coming. Right now, a lot is happening for geopolitically in the world. Trump and Iran are having their back and forth. So is actually telling on the markets, So the week ahead, the conflicts in Iran is actually going to be the main focus. Let me see if I can increase the screen. All right. So the conflicts with Iran will remain focused as it enters its sixth week, and traders will continue to assess prospects forward, the escalation, as well as any concrete development toward the opening of Strait of Hormuz, following ongoing back and forth in recent weeks with the US and Iran. In the US, attention will turn to FOMC, CPI data, and ISM services PMI. All right. The preliminary Michigan consumer sentiment reading and the PCE report. Investors will also look to fresh corporate earnings. That's for people who are invested in stocks, right? Including results from Delta Airlines as the earnings season gathers momentum mid-month. Elsewhere, key releases include China CPI, Germany's factory orders, and monetary policy decisions from Reserve Bank of India. These are things that are actually going to be happening for next week. All right, let's look at Forex Factory. Okay. So Forex Factory, from Monday, we have our ISM services PMI. On Tuesday, there is no news. On Wednesday, we are expecting volatility for FOMC minutes. On Thursday, by 8:30 a.m. EST, we are expecting PCE readings, final GDP quarter upon quarter, and CPI for Friday. All right, CPI for Friday. So back to the charts. We can see structure-wise, we have this high, right? We'll have this high, and then we'll have this low, which is obviously an order block. All right. So this order block is a key level, and you know that whenever we are trading, it is internal liquidity range to external liquidity range. And what is the external liquidity range here? We have number 1, we have number 2, we have number 3, and then we'll have the final part. So these levels are actually external liquidity ranges where we are looking that the market will tap into before taking out the final one. So it's a very high possibility that the market would come into this zone, do some little retracement, get back up, do some little retracement, and all that before it gets to this point. But then this is on the higher time frame. We're not going to focus on that. What we are focusing on is what is happening right now. So if you look at this chart very well, you see that we have a fair value gap. That is another key level here that the market rejected from, right? Tapping into this weekly order block. If we are to reform it to be more concise into this weekly order block, right? And then a weekly fair value gap. And what did price do? Price took liquidity from all weekly lows. This one, and this one. So price reacted from this weekly low. And what did price do? Price actually do what? Rejected from it. Now, when price rejected from that, it means that a lot of people have been trapped here within this level. A lot of people have been trapped within this level. So we are anticipating that the next form of distribution that we are going to see is we are going to see this high being what? Being taken out. Let me use a horizontal line here. So this high, I'm anticipating that this high will be what? Will be taken out. Why? Because we actually took liquidity from this other block, being that we are still bullish on the weekly time frame. We are still bullish on the weekly time frame, and we tested into a fair value gap. We now took out a lot of traders, a lot of liquidity within this zone, and then we rejected and closed bullish with a pin buy or a hammer. We could call this a hammer. All right. So I've mentioned like 4 things right now. That is one of the reasons why I'm anticipating that this high should be taken. But then this is on the weekly time frame. Okay. So let's go to the daily time frame. What can we see on the daily time frame? Now, one of the things that we can see on the daily time frame is a market structure shift right here. We can see a market structure shift right here. And that market structure shift is coming from the weekly level. It's coming from the weekly level. Okay. So the next thing that we are actually going to be noticing here is a daily fair value gap. A daily fair value gap that was what? Traded into and then got rejected. Right? This fair value gap was traded into and what was rejected. It means that price is gathering enough order at this fair value. All right. There is a fair value price that price is gathering enough order from. All right. So this is what we can see on this. So what does it mean? This means that this market is actually bullish. All right. This market is actually bullish. We are not closing because at the beginning we had a closure beneath this fair value gap right here. That would be a change in bias. It means that this buy side imbalance, sell side inefficiency will now be what? Will now be this fair value gap. At the beginning we had a full closure beneath this fair value gap between this low, this high, sorry, and this low. If we had a full body candle close beneath this, then that is a change in bias. So, but now the bias, my directional bias, which is one of the things that has given so many traders headache in this industry, is identifying bias and knowing where the market is going to. All right. So my bias is actually what? Is actually bullish. Okay. So let's go to the H4 and see if we can see market structure. Okay, cool. Now, you see that H4 came into what? Into an order block. There was an order block on H4 that the market came into. Now, remember that the market will only do one of 2 things, which is what? Take out liquidity or rebalance, and imbalance. So right now, we have this series of imbalance that is what? That has been rebalanced and mitigated. We have an order block here that was what? That was mitigated. Now we are expecting, I am expecting that this high will be my first line of what? Of take profit. Why? Because even after we took out, remember our weekly fair value gap and also an order block, we had what? A structure shift on H4. And remember, H4 is where your what? You determine your market structure. You determine what the market is doing, the structure of the market. Right now, the structure of the market is what? Is giving us a higher highs. Higher highs. That's what the market is giving. So we are anticipating that the market will do what? Will take off this high and eventually get to our final target, which is around 5044.43, which is around 504.43. But 4,800 is our first take profit. So if you are looking for trade setups, you look for buy trade setups on gold towards 4,800, right? Towards 4,800. On H1, so on H1 now, it is on H1, after taking up this 4 hours order block, we also had a shift here. We also had a shift there. So now, what happened? We had this low, this high, and then instead of having a lower low, we didn't. Instead, we had a higher low, right? Giving us another higher high. So we are anticipating that this market will take out this level. Okay. We're anticipating that the market will take out this level based on the fact that H4 is actually bullish. H4 is actually bullish. That's what I am anticipating. And I'll be looking for confirmations that we align with what? With my bias. I wouldn't just enter the market blindly. No. I will wait for the market to do what? To give me confirmations, just like what we have here. If you are in my inner circle, you know that we trade a 3-candle pattern. And that 3-candle pattern, that was what we traded on Friday, right? We traded on Friday after the market tapped into a higher time frame key level, right? It got rejected, so we waited for the pullback and we entered, right? Entering, this is our first take profit, and then this is our second take profit. Okay, so you anticipate the market and follow what the market is doing. If you want to do what? Want to buy, there are things you should see in the market that will do what? That will guarantee that this market is about to do what? To buy. All right. So now, invalidation of this bias is when we have a sell candle that will take off this low. So anything below 4529 or 4530, anything below 4530 is a sell zone. Anything below 4530 is a sell zone. All right. Guys are following. This same analysis with silver. Same analysis with silver. Let's look at BTC. Okay. Now, BTC is at a point of where? At this demand level, all right? BTC is at a discount level. On the weekly time frame, BTC is at a discount level. So we are anticipating that this market should do what? At least buy up to 50% of this range, because we have this high here. We have the low, sorry. We have that low, and then we have this high. So we are anticipating that from this demand level, that the market should do what? Retrace at least to 50%. I will also have a break of structure here, because the market took out the low that gave birth to this high. It was this low that facilitated this high, and then we had this move take it out. So we are anticipating that the market should at least come to this level before deciding to either go forward, that is go north, or continue south. Either to go up or to continue south. So on the weekly time frame, we are at a what? We are at a discount level. So going to the daily time frame, what can we see? Okay, on the daily time frame, we can see, I can see that we have this high have been taken out. This high too have been taken out. And then we have a liquidity grab here on previous day low, right? So that liquidity grab, for our entry model, we already hit take profit for the buy, hence we had the sell. All right. But right now the market is already buying back up. The market is already buying back up. Okay. So for now, I am neutral on BTC. Why? Because it's more like it's looking like it's in a consolidation. If you look at this bigger range here, you see that we are trading between this high and then this low, right? We are trading between this high and then we are trading between this low. So it's in a range. The market is in a range. So it is okay not to really have a bias at this point. You need to understand what the market is actually doing for you to have a proper bias and say, okay, we are now going higher or we are not going higher. So you can see that it's just giving small bullish candles, smaller bullish candles. That is just what the market is giving. It's giving small bullish candles. So you cannot say, okay, we are fully ready to start buying. No, we are not yet. So the market needs to decide where it's going to be going to before we now commit to the trade. All right. GBP JPY. Let's look at the weekly. Okay, so we had a structure shift here on the weekly with this displacement candle, right? With that displacement candle. And also we had series of what? Of rejections here, giving us a bias. That was last week, and it actually did what? It actually played out. Okay, so this week I'm actually looking at continuation of GJ. I'm looking at continuation of GJ to the downside. But then let's look at Let's go to the daily time frame. See what we can see there. Okay, on the daily time frame, we can see that we had a shift here. The market took out this relative equal lows. So we had a shift there. So having that shift, what does it indicate? It indicates that the market wants to do what? Go lower. The market actually wants to go lower. And I can see something. I can see something that looks very interesting. Can tapping into a fair value gap, a key level on the daily time frame, which is this. Tapped into it and rejected below, closed below this high, the high of this candle. The next candle also came and did the same thing. The third candle also came and did the same thing. So right now that the market has actually opened. So we are anticipating what? We are anticipating, I am anticipating that the market will take out this low. All right. I'm anticipating that the market will take out this low. That is bearish. I'm anticipating that the market will be bearish to take out this particular low. Okay. If you have questions, you can type it on the chat box. I'll be glad to respond to you. If you have questions, please put it on the chat box. I would want to respond to you. Okay. So this class is actually recorded. I'll have to work on it tonight to post it tomorrow so that you can all watch the analysis and the breakdown. Okay. So for GU on the weekly time frame, you see on the weekly time frame we took out these lows. So taking out these lows, what does it mean? It means that we have a strong bearish sentiment to the downside. We have a strong bearish sentiment to the downside. So GU is still on a what? On a sell trend. GU is still on a sell order flow. Okay. So we'll be looking out for opportunities to do what? To sell GU. We'll be looking out for opportunities to do what? To sell GU. To sell GU. So GU is bearish until we have a close above 33461, 1.33461. That is where we would say, okay, that this market has changed its structure. But right now, the structure remains bearish, and we are actually looking for bearish markets. See, they came and mitigated this other block right here, and then started drop. Started dropping. Okay, that's it for GU. To enter this trade, we have some key levels that we can actually look out. We have this zone, and we have this as inducement. So that's it. I'll be anticipating we take this and then continue falling. USD JPY will obviously buy. If GJ and GU is looking bearish, UJ will be a buyer. All right, that's the pairs that I have for tonight. If you have questions, please send it to the community group, or you can ask me in any of my social media accounts at Dr. Richard_Fuet. Okay, so we have already spent 30 minutes on this call, and that is the stipulated amount of time for each of our call, snappy and fast, so that you can go and do some other things. So thank you for joining the call. I'll see you guys on the next one. Bye-bye.